Now we're going to put together our income statement. So the nice thing about this is we're not going to do the income statement per month. We're just going to do the income statement for the quarter ended. So I've got the name of the company, Bryn, and then this is an income statement, and this is for the quarter ended March 31st. So the first item that I'm going to start with is our sales. So I can grab this off of our cash budget because I had my sales there, and it's for the quarter, so it's the 1.3 million. And now what we're going to do is we're going to deduct our cost of goods sold. So remember, this is made up of beginning inventory, and then when we add in our purchases, that gives us our goods available for sale. And then if we subtract out our ending inventory, that will give us our cost of goods sold number. Okay, I also know, I could probably skip all that because it told me that cost of goods sold should be, I think, was it 40? No, 60% of sales. So let me just double check this. I know, just because it told me earlier in the question that gross margin is 40, so our cost of goods sold should be 60%. Okay, so I'm just going to verify that number. So if I take my beginning inventory, so the beginning inventory at the beginning of the year, so this is the 60,000, and then I add in my purchases. So that's the 750. So I'm just getting all these numbers from the purchase budget. And you can see the cost of goods sold number right there anyways. And then add those together. And that gives us our goods available. And now I'm going to subtract out the ending inventory. Which is right here on the purchase budget. And then that gives you the cost of goods sold. So I do want you to go the long way like I did just to verify that that number is correct. And then what we're going to do is we're going to subtract the sales from the sales minus cost of goods sold, and that gives us our gross margin, or sometimes we call it gross profit. So next we're going to subtract all of our operating costs. And because we did its own schedule, it makes doing this part a little bit easier. So if we go to the schedule of operating expenses right here, we're just going to put these numbers down. Now just remember, if there was any non-cash items, we'd have to include them on the operating expense because the income, or on the income statement, because the income statement is accruals, so we want the non-cash items there, whereas the cash budget is just the cash. So salaries and wages, there was advertising, there was shipping, depreciation, and other expenses. So I'll just go up here and grab them. So it's just all of these. And I can just drag the formula down now. There we go. Oh, I didn't even, silly me, I didn't even calculate depreciation. Here we go. So those are those four down there. So that's just from this schedule. So I'm going to have to calculate the depreciation expense. So we have to just see what that amount is. See if they tell us. So in part E, if we go back, it says that depreciation is $14,000 per month. So remember I skipped that when I was doing my cash budget? So I'm going to now put it down here. Depreciation expense. So 14,000 times by 3. There we go. And that gives me the proper amount. Whew. Okay, and now these are our total operating expenses. So I'll just sum those up. Okay, so I've got gross margin. I feel like I've done something really incorrect here because normally we don't end up with a huge loss. Let me just go back and check these numbers. Okay, so 81,000. Here's the 81. The advertising is 210, which I agree with. Then the shipping is 65 and the other expenses is 39. That's weird that that came down like that. Oh, I grabbed the total instead. I don't know how I did that. There we go. So now that looks better. I'm always expecting for there to be a profit. So now what I can do is subtract the 520. So take 520, subtract the 437, and this is your net operating income, or I like to call it earnings before interest and taxes. So that is EBIT. Then we can subtract out our interest expense. So that's the amount from the cash budget. So it's this amount here, the 2,400. And then that will give us our earnings before tax. So that's EBT. So that's 83,000 minus 24, and then subtract out our taxes. But there's no taxes in this question. If there was, it would give us the tax rate, and then we would just multiply it by our EBT. So I'll just put 0, but I'm just leaving that as a placeholder when you do another income statement. And then I have earnings after tax, which is EAT, or we call it net income. Okay, so it's making that look pretty. So dollar signs whenever you start a new row, just like that.